Hey everyone, welcome back. Ready to dive into some market action. Today we're going to be looking at all the major financial news from December 5th, 2024.
Yes.
We've got a whole stack of market summaries and news reports.
That sounds good.
So let's imagine you're, walking into a big meeting, a presentation, or maybe you're even getting ready to make a big investment decision.
Yeah,
Wouldn't it be great to sound like you really know what's going on in the financial world?
absolutely.
Well,
Yeah.
that's what this deep dive is all about.
Let's break it down.
We're going to give you those key takeaways and help you sound super smart.
Okay, so right off the bat, we've got the U.S. stock indices hitting record highs.
Yeah, I saw that. The Dow Jones, the S&P 500.
All of them. It's pretty remarkable. It really is.
And a lot of this is being driven by those big tech companies.
Yeah. Salesforce had that 11% jump, and Marvell Technology, they surged like 23.2%.
Yeah, huge gains.
That's crazy. So with all this good news, is this why people are talking about interest rate cuts?
It's certainly fueling those conversations.
Yeah.
Investors are definitely watching closely, trying to see what's going to happen next.
Right.
But the Fed, led by Jerome Powell, they're still pumping the brakes a little bit.
Oh, so they're being a bit cautious.
Yeah, they're sending signals of caution.
Okay.
They're really focused on keeping inflation under control.
Makes sense.
Got to find that balance, right?
Yeah.
A healthy economy without letting things overheat.
So everyone's kind of on edge waiting to see what happens.
Exactly. Like waiting for the other shoe to drop.
Right.
And you know what that shoe is.
What's that?
It's the jobs report.
Oh, right.
That's coming out on Friday.
Friday. Okay, so that's a big deal.
It's huge. It's the economic indicator that everyone's going to be glued to.
So why is that report so important?
Well, it's kind of like getting a full health checkup,
Oh, okay.
but for the labor market.
Okay.
So analysts are going to be looking at everything.
Like what?
How many new jobs were created? What's the unemployment rate looking like? Even how much wages are growing.
Okay.
It all helps to paint a picture of how strong the economy really is and what that means for inflation down the line. And this will really heavily influence the Fed's next move.
Got it. So big implications all around from that jobs report.
Huge.
But while we're waiting for Friday, let's shift gears a bit.
Sure.
Look at what else is happening.
Sounds good.
I saw that Robinhood, the trading platform, they're expanding into Asia.
Interesting.
Starting with Singapore.
Okay.
So what's the deal with that?
Well, choosing Singapore as their base, that's a really smart move.
Oh, how so?
Well, have you heard of the Straits Times Index?
Vaguely.
It tracks the Singapore stock market.
Okay.
It's actually been the top performer in Southeast Asia this year.
Really?
It's up 18%.
Wow.
So Robinhood is clearly trying to tap into all that energy.
So it's not just about, like, getting more users.
Yeah.
It's about
tapping into a region with a ton of growth potential.
Right. That makes sense.
Yeah.
But, it's not all sunshine and rainbows out there.
Right.
We've got some pretty serious stuff happening, too.
Oh, yeah, for sure.
Like France?
Yeah.
They're facing a no-confidence vote in their government.
Huge political uncertainty there.
Yeah, and then you've got South Korea.
Yeah. What's going on over there?
Their president declared martial law.
Wow.
That's big. So how do these events actually impact the markets?
They definitely add a layer of, I guess you could say, a layer of complexity.
Okay.
France is, a major player in Europe.
Mm-hmm.
And any instability there,
Yeah.
it can have ripple effects across the whole region.
Right.
And then you have the situation in South Korea
Yeah.
that could disrupt supply chains and even investor confidence.
So it's not just about what's happening in those countries.
No, not at all.
It's about how it impacts.
All interconnected.
Yeah, but how much should I, like as an individual, really care about, say, political turmoil in France?
That's a fair question.
Yeah.
It's easy to feel disconnected from these global events, but here's why you should care.
Okay.
These situations create volatility in the global markets.
Right.
And that volatility can influence everything.
Like what?
Investment decisions,
Okay.
prices of the things you buy every day, even currency exchange rates.
Wow, okay.
If you're planning a trip abroad or something.
Yeah.
It's all interconnected.
All right, so paying attention to global news, it can actually help us make better financial decisions.
Absolutely.
Okay, cool.
Stay informed.
Now, let's talk about something that's been making headlines.
Okay, what's that?
Bitcoin.
Ah, Bitcoin.
It just broke through that $100,000 mark,
I saw that.
peaking at $102,500.
Pretty impressive.
It is. So what's driving this surge?
Well, it's not just those, individual investors anymore.
Yeah, like,
We're seeing more big institutions,
like who?
even major companies.
Wow.
getting in on the action.
Interesting.
They're starting to see the potential of crypto.
Okay.
And this, along with, a general feeling of confidence in the markets,
Yeah.
it's a sign that Bitcoin is becoming more mainstream.
Okay, so big question.
What's that?
Is this a new crypto boom?
Ah, the million-dollar question.
Or are we headed for another bubble?
It's hard to say for sure.
Yeah.
But Bitcoin has been showing some remarkable resilience,
Mm.
and it's definitely attracting some serious attention.
Interesting. Okay, let's move on to India now.
Sure.
They've got this huge IPO happening.
What is it?
The Vishal Mega Mart,
Okay.
a big supermarket chain.
Okay.
And their IPO is expected to be worth almost $1 billion.
Wow. $1 billion.
$1 billion.
That's a lot of groceries.
It is, but it's more than just groceries, right?
Right.
This IPO, it
Yeah.
gives us a glimpse into India's consumer market.
That's a great point.
It's booming.
Yeah, their middle class is growing like crazy.
Exactly.
They have more money to spend than ever before.
And that's why investors are so interested.
Exactly.
They see this huge potential for growth.
It's not just investing in a company, it's investing in a whole country's economic future.
Right, that's a really good point.
Yeah.
Okay, let's talk about oil.
What's happening with oil?
Well, OPEC Plus.
The oil cartel.
Right, they decided to hold off on increasing production.
Okay, so they're not increasing production.
Not yet. They're pushing those increases back to April.
Interesting.
And even extending the unwinding of previous cuts.
So what's the strategy there?
It seems like they're trying to be cautiously optimistic.
Okay.
They see signs of growing global demand,
Okay.
but they're also worried about oversupplying the market.
They don't want to cause any price swings.
Right, they're aiming for stability.
Got it. Makes
Yeah.
sense.
But how will this affect gas prices?
Well, that's the big question.
Yeah.
If demand for oil spikes faster than expected,
Mm-hmm.
these delays could lead to higher prices.
No.
And those higher prices, eventually we feel those at the pump.
So we got to keep an eye on that.
For sure.
But before we get too gloomy,
Yeah.
there is some good news.
Good news. I like good news.
Mortgage rates are going down.
Oh, really? That is good news.
Yeah. Remember how high they were?
It was making it so hard to buy a home.
I know. But now we're finally seeing some relief.
Okay, so how much have they gone down?
Well, they've dipped across all loan durations.
Yep.
The average 30-year fixed rate,
Yeah.
it's down to 6.79%.
So that's a pretty significant drop.
It is.
So does this mean the housing market's about to take off again?
Well, it's a good sign.
Yeah.
Lower rates mean homes are more affordable.
Right.
So hopefully this will encourage more buyers to enter the market.
It'll be interesting to see what happens.
Yeah, it's a trend to watch for sure.
Absolutely.
We'll have to keep an eye on it.
Definitely.
So we've covered a ton of ground here, from stock markets to global, what's happening, crypto going crazy, even a glimmer of hope for the housing market.
Yeah. It's a lot to unpack.
It is. So if our listeners are, trying to make sense of all this, what are the key takeaways? Like, what should we really be focusing on?
Well, I'd say first and foremost, that jobs report on Friday.
Okay, the jobs report, right?
It's going to be a big one.
It is going to be huge.
Yeah, it'll really give us a clearer picture of, whether those interest rate cuts are really on the table.
Right, right. So Friday is D-Day for the markets, basically.
It is. Buckle up.
Okay. And what else should we be watching out for?
Well, don't forget about those global tensions we talked about.
Oh, right, right. Like in France.
Yeah, France and South Korea.
Mm-hmm.
They're just two examples of how political events can really shake things up.
Yeah.
It's so important to stay informed
Right.
about what's happening around the world.
Yeah, because
Yeah.
it can actually impact us here.
Exactly.
All connected.
Sometimes those events that seem really far away,
Yeah.
they can have ripple effects that, we feel right here.
It's true. And speaking of global stuff,
Yeah.
that India IPO, that was pretty interesting.
Yeah, Vishal Mega Mart.
Yeah.
It's a prime example of,
Yeah.
the amazing growth happening in emerging markets.
Yeah.
Investors are definitely starting to look beyond those traditional markets.
It's like, it's not just Wall Street anymore.
Exactly.
You got to look everywhere for those opportunities.
Exactly. But it's important to approach them with a balanced perspective.
Okay.
Like cryptocurrencies.
Bitcoin.
Yeah, Bitcoin's surge, it's definitely exciting,
Yeah.
but it's still relatively new, and it can be super volatile.
Yeah. It's
You got to do your research,
Right.
understand the risks, and never invest more than you can afford to lose.
That's good advice.
Yeah, it's easy to get caught up in the hype,
Mm-hmm.
but a little caution can save you a lot of headaches down the road.
That's very true.
Now, let's circle back to those mortgage rates for a second.
Okay. Yeah, those were going down.
Yeah, it's good news,
Yeah.
but It's important to look at the bigger picture here.
Okay, so what's driving those lower rates?
Well, there are a few things at play.
Okay.
One is the Fed's stance on interest rates.
Oh, right. Like if they hint at cutting rates?
Exactly. If they signal that they might cut rates soon, that can push mortgage rates down.
It's a domino effect almost.
Those. And then there's the whole economic outlook.
Okay.
If investors get worried about a slowdown,
Yeah.
they tend to move their money into safer assets,
Okay.
like bonds.
Mm-hmm.
This can actually push down bond yields,
Okay.
which then leads to lower mortgage rates.
So it's like this whole web of interconnected things.
It is. And then don't forget about the housing market itself.
Right.
If there are a lot of houses for sale,
Yeah.
but not enough buyers, that can also put downward pressure on prices.
Yeah.
And then that can lead to lower mortgage rates, too.
So there are all these different forces at play.
It's complicated.
Yeah.
But the good news is lower mortgage rates could mean that homeownership is more attainable for a lot more people.
Which would be a good thing.
Yeah, definitely.
So do you think this dip in rates is just temporary?
That's the million-dollar question.
Right.
If I had a crystal ball,
Right.
I wouldn't be here.
You'd be on a beach somewhere.
Exactly. But seriously, it's hard to predict for sure.
Really?
But it is worth thinking about the possibility
Right.
that this could be a turning point for the housing market.
Okay, so we got to watch those signals.
You do. Look for those trends.
Mm-hmm.
But that's what makes this so interesting, right?
It does.
It's dynamic.
It's like a puzzle.
It is a constantly evolving puzzle.
You think you've got it figured out and then
Boom. Something new happens.
changes everything.
But that's the financial world for you.
Right.
Constant change.
The only constant is change.
Exactly.
Okay, so I want to throw out a challenge to our listeners.
Okay, I like challenges.
We've talked about so much today.
Yeah.
Stock markets, global uncertainties, emerging markets, crypto.
It's a lot.
It is. So with all that in mind,
Yeah.
what industries or regions do you think are going to see the most growth in 2025?
Ooh, good question.
It's a tough one.
It is.
I'm going to have to think about that.
Me too. And I encourage all of our listeners to think about it as well.
Yeah, take that challenge.
Consider the trends we've discussed.
Mm-hmm.
The rise of technology, the growing middle class in developing countries, the move towards sustainable energy.
Right.
Where do you see the most potential?
It's almost like a financial forecasting game.
It is.
I'm definitely going to play.
I'm in.
And I hope our listeners will too.
It's a great way to apply what we've learned and really try to anticipate what the future holds.
It's all about staying informed, really.
That's it.
Analyzing those trends and making smart decisions.
And that, my friend, is what being financially savvy is all about.
And hey, don't forget to subscribe to The Deep Dive
wherever you get your podcasts,
so you don't miss any of our future explorations of all things finance.
We're here to help you stay curious.
Staying informed.
And stay ahead of the game.
Speaking of staying ahead of the game, I'm already thinking about those industries and regions we were talking about.
Oh, yeah.
The ones with the most potential for growth in 2025.
The challenge.
Yeah, it's a real head-scratcher.
It is.
Makes you think.
It does.
Maybe we should revisit this conversation, I don't know, in a few months.
Yeah, check in.
See how our predictions panned out?
Yeah. I'd be curious to see what surprised us.
Right. Like, what trends really took off?
What unexpected twists and turns happened.
Yeah, because the market, it never sits still.
That's for sure. Constant change.
Always something new to learn.
Keeps things exciting.
It does. It's all about embracing the journey, right?
Absolutely. Enjoy the ride.
Well said. Well, thanks for taking this deep dive with us today.
It's been my pleasure.
To all our listeners, keep those minds sharp.
And those wallets happy.
Until next time.
See you then.